completely outmatched, and you don't even know it. Just picture it. You're standing there, and Jasprit Bumrah is about to bowl a 150-kilometer-per-hour scorcher. And what's in your hands? A plastic toy bat. It's not just a mismatch, right? It's a complete disaster waiting to happen. Well, what if I told you that this exact same scenario plays out every single day? Not on a cricket pitch, but in the stock market. And there it is. The cricket pitch is the derivatives market, and that plastic bat, well, that's the set of tools most retail traders are bringing to the fight. Every single day, thousands of people are stepping up to the plate, totally unprepared for the professional level game they've just walked into. So let's call this exactly what it is: the plastic bat problem. It's this whole issue of being fundamentally under-equipped, totally outmatched. Basically, you're set up to lose the game before you've even made your first move. Because here's who's on the other side of the field. You're not just up against other individual traders. You're facing massive institutions, the real pros. These guys have the best tech, mountains of data, and entire teams of experts who live and breathe this stuff. They've absolutely mastered the game. It's David versus Goliath, but David showed up without his slingshot. So what's the real-world result of this epic mismatch? Well, the numbers are pretty staggering, and they point to a huge misunderstanding about why so many people fail at this. 94%. According to the source material, that's the percentage of retail traders who lose money. Just let that sink in. For every 10 people who give it a shot, more than 9 of them fail. But the most important question isn't that they fail, it's why they fail. And here is the absolute key insight. This failure has nothing to do with how smart you are. You could be a genius and still lose your shirt in the market. The problem isn't intelligence, it's a lack of training. It's about being trained to see the real game that's being played, not just the simple version you see on your screen. This really shows the two different mindsets perfectly. The plastic bat approach, over on the left, is all reactive. You're just chasing prices after they've already moved. But the professional approach, on the right, that's proactive. It's about looking at the market structure to figure out why a price is likely to move, before it ever does. Okay, so how do you actually make that jump from being reactive to proactive? Well, it all starts with learning to look past the price chart itself, and starting to see the invisible forces that are actually pushing the market around. This is the core idea. Just watching price candles go up and down is like watching the scoreboard of a game without ever seeing the players on the field. Sure, you see the result, but you have no idea why it happened or what's likely to happen next. So the first pro tool is something called order flow. Think of it like a thermal vision camera for the market. While the price chart just shows you where the ball landed,
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. So let's start with this Monday 5 p.m. session. And as what we do, let's understand the structure first, and then we'll move on to what we can look for tomorrow's settlement in Nifty. So we have the weekly report, which is updated in the forum section on the website. So let's have a quick look at what we have done last week. To start with, in Nifty spot, we formed a neutral extreme profile to the upside on the weekly time frame. And what did we do last week? The week prior to last week was a neutral extreme profile, but it was to the downside. So we know for a fact that neutral extreme rarely gives a follow through. So this neutral extreme also did not give a follow through. We opened around the place where we closed, and we got back into this weekly value with this initiative buying tail. But what we saw on Monday was similar highs, which was showing us, which was telling us exhaustion on the upside. So this exhaustion then meant the buyers were not adding up at this level. So what the auction did the next day, it gave a drive down from this POC and then it broke below this initiative buying tail, but the lows were made in a seaside. We give lot of importance to the seaside, and we have setups based on the seaside extension, based on the kind of seaside extension we get. So when we made the seaside low and we were unable to make lower lows after the seaside, it was very clear that this was again a C for Dhoka extension. And what we saw later in the day was a move back into this weekly value and then repair of these poor highs and then neutral extreme profile to the upside on the daily time frame. What this neutral extreme on the upside on daily did was also confirmed a failed auction on the weekly time frame. This low of 25449 became a weekly FA, and because we closed above this point, this became our support 25653. So as long as we were staying below this weekly FA was in play, and the 180 target was at 25910, which we hit with after the gap up open on Wednesday. So clearly the seller failed here and the buyer took advantage, and we got this rare follow through to a neutral extreme profile. So we formed this P-shaped profile which stalled right at this weekly VPOC of 25935. In fact, the high of that day was 25934. But then again, the test of this buying tail saw buyers again coming back. And this gave us new highs. And these new highs stalled where again it completed the 80% rule in this weekly value. This is a well balanced value area zone. So once we got back into this, the value 80% rule was on. We hit the first objective of the 80% rule, which is the POC, and then on 13th we completed the second objective. So you can see how once we have got back into this weekly value, we were seeing buyers holding it up because the objective was not done. And when we hit the objective 26002 was this value area high, what did we do? We left a small responsive selling tail. So these are very important cues you get in market profile, especially on the spot charts, because we don't have volumes in spot and we don't have order flow signals in spot. So we need to see where we are getting acceptance and where we are getting rejection. So single TPOs at important references are telling you that this is getting rejected. So the probe above this value was rejected. Hence, we then made the reverse 80% rule. In fact, we continue to probe lower on Friday. But then again, you can see the extensions we made were in C and J. Both these TPOs are infamous to give con extensions, Dhoka periods, and we call them cousins. C and J, we call them cousins because they cannot be relied on, both of them. So you can see the first low which was attempted outside the initial balance was in the C side, and then we made it in the J. But this weekly POC of 25754 was holding, and so was this gap zone. 25715 has been an important reference in spot from the last month. We have seen uh, the auction changing character right at that level. So again, you can see how these lows was right there. Once it was broken, it became resistance, and then once it was taken out in this gap up, it became support. So this 25715 will continue to remain a support in the coming days. And what we did on Friday was we formed a very nice Gaussian curve. It was a normal day because the downside range extension was failing. And into the close, we saw this spike. We left an extension handle at this IBH and we closed around the highs. So this was again a neutral extreme profile to the upside. So on the weekly time frame, what did we do? The weekly time frame was, as I mentioned at the start, was a neutral extreme profile to the upside, but it also resembles a double distribution structure because we made a lower distribution with a HVN at 25632, from where we moved away to the upside. We have a zone of singles here. 25751 to 25715, I think, is that small zone of singles. And now we have made a upper distribution with the POC at 25893. So we were bullish for today at the open because we have closed above this POC. So we were looking for the uh, 280 target from this failed auction. because we have closed above this 25908. So this 25908 would be our immediate support along with this POC of 25893. And then we are looking for probe higher, new highs for the year 2025, and also a tag of the ATH of 26277 and the 2 ATR mark of 26366. That is the zone for the upside. What were the hypos for today? You can see how we stayed above this weekly POC, and we have mentioned in our sessions how on the weekly time frame we give POC the utmost importance, and above the POC we are bullish, below it we are bearish. So once we opened above this, we were looking for upside. So we went on to take off this 25940, 25989, and we made a high of 26024 today. So we were almost close to that unvisited daily VPOC of 26042. 26024 is the high we made today. So that is what has happened today. We have had a bullish start to the week. We had a very small buying tail, and that will be the key going forward for tomorrow's settlement. I'll open up today's chart in a bit, but spot chart in a bit. Before that, let us just go through what we did in Bank Nifty spot. So Bank Nifty spot also last week was a neutral extreme to the upside. The open last Monday was a very sober one. We opened completely inside previous week's value, and we made a very narrow range normal day. So this indicates coiling. And what is it telling? Both the buyers and the sellers are not the bigger time frame buyers and the sellers are not playing. They are just watching the auction, and they are saying what the buyer or the seller is making an attempt. This is more like a boxing match where the boxer is waiting for the other player to make a mistake and then to take advantage of it. That is the reason there was not much activity on Monday. It was a very narrow range coil with a prominent POC at this 58030 level. But then what we saw on Tuesday was similar to Nifty, a drive down from this POC. We left an A period selling tail. But then again, what we saw was a seaside move. And this seaside move, the attempt to break below this value in a seaside was not complemented by any other TPO. So once we got back into this value, this was showing us rejection. The seaside is again given as a false move, and we completed the 80% rule in this weekly value, making new highs. And similar to what we saw in Nifty, we got a failed auction at these lows of 57594, and here we saw how the probe below previous week's value was rejected. We saw the same thing on the opposite side in Nifty spot. We saw how on last Thursday, we got a small responsive selling tail outside the weekly value, which told us that the upside is done. Here, this was telling us completion of the downside move. And here again, we formed a neutral extreme profile, both on the daily as well as on the weekly. So we were looking for more upside, which we did. And what we saw was a move away from this weekly value. And you can see how once we moved away from this weekly value, to get back to the context, what we saw in Bank Nifty for the last 3 weeks was overlapping value. Last week, we made an attempt to move away from these 2-week balance, but we failed, and we ended up forming overlapping value. So this the next week, what we saw was moving out of this 2-week value area high, and here we were seeing rejection when it made an attempt to get back into that weekly value. So what we finally did in Bank Nifty was a neutral extreme profile to the upside with overlapping to higher value, and we closed above the value, and we had the similar highs. So it was very clear that the highs are not secure, and we can make an attempt to get new all-time highs in the coming week. So accordingly, the hypos for today was marked. We had the first reference on the downside right at the arrow point, rollover point. This was our first reference on the downside, and we opened way above it. In fact, we opened at this 180R target from the weekly FA of last week, which was at 58687, and we made an attempt to probe lower. We stalled right at previous day high. So it was more an open rejection reverse start in Bank Nifty spot, and that is the reason we were able to take off these three hypos on the upside. We just tagged this big round number of 59,000, and it is happening for the first time ever. So it stalled over there, and we have closed right at that 59001 mark. In fact, we made new highs into the close in Bank Nifty spot. So we can expect the imbalance to continue on the upside, and we will have to accordingly take it forward. So that is as far as the spot is concerned. Let us now move on to the daily report, which is based on the futures, and we have the business areas marked up in this zone, which are important references which we can use for the open. So today's first downside reference was 24941, and we had to stay above the previous close, and the POC was at 25971, yesterday's POC. So today's low at the open was right at the 25971, which was telling us that the PLR is to the upside. And that is the reason we took out this 25999. But this HVN from 13th of November, where we saw supply coming back, we saw that RS plus IS when we hit the rollover point, and then we saw the retracement down on Friday at open. So this acted as a important hurdle, and this did not give a gate pass in the first half of the day. Later on, we did go on to scale above this, but then we stalled right below this selling tail from 13th of November. So I'll open up the Nifty futures along with the order flow, and we'll have a closer look at both of them. So today there was no case of being bearish because the business areas we opened was right in the green zone. So we took off these first three and we almost tagged the fourth one. This is also coinciding with the rollover point. So it is very important for us to take that rollover point in Nifty futures to get more bullish in it. Because in Bank Nifty, we are way above the rollover point. That is the reason we are seeing that bigger move and a stronger open we saw in Bank Nifty futures today. So coming to the Bank Nifty futures, Friday was a nice Gaussian curve. You can see how this is a balance, and we on the bigger time frame we were forming overlapping value for 3 days. So when you see this kind of a structure on the daily time frame, you know that this is calling for a move away from balance. We could get into a zone of imbalance, and that is what happened. We opened well above this POC, and even in Bank Nifty futures it was an open rejection reverse start, and we went on to the lows which we made today was right at this POC. 58693 I think was the low today. So we were well above the POC. We took off the swing high from last week, and then we took off the ETH from 23rd of October, which was at 58857. And then we tagged this 59025 180R from the series POC of 58573. And then we stalled when we made an attempt to extend higher, and we ended up forming a P-shaped profile. But nonetheless, we have got a nice long A period buying tail in it. So that will be the support going forward, and it does look for more upside, but it will have to take out today's value area high with a IB3 in order flow. So let's now move on to the Nifty futures market profile chart and the order flow of today, and see what we did in both and what will be the important levels to watch out for tomorrow. So as we mentioned, you can see how the low of today was right at this POC. So same concept applies for all time frames and on all instruments. We were talking about how on the weekly spot chart we are bullish above the POC, bearish below the POC. So the same thing holds good even for futures. So VWAP was way below. So the open above the spot future Friday's POC was a bullish sign, and although it was not very bullish because in the order flow we did not get huge volumes, it was just about average in the first 15 minutes. And as I mentioned, this HVN of 26050 was stalling the up move in the first half of the day. That is the reason we got this dip below VWAP in the E period. C side you could take it for it being a habitual offender. So what happened in C we can negate it, but still that C side was taking support at this VWAP, which was acting as a supply point. And then the lows which we made in E, you can see how this 25980 was the highs you got almost, I think, in 3 or 4 30-minute bars last week. So we have the order flow chart here. So I'll just quickly shift. So here you can see how the highs of Friday itself was at 25980. And before that, the close on Thursday was again 25980. The opening high on Friday was again 25980. So what is this telling us? This 25980 was held by sellers. And today in the E period when we made those lows, and the low was showing us this level which was stalling the upside last week. So what does this tell us? That this 25980 is showing us change of polarity, and you've got an RB bar here. So this was a very classic case where you could have used this dip to go long in Nifty futures or in calls. And that is what we discussed and we did in the VLD also, because this POC was our reference. This held in the morning and this dip showed us an RB right at where the previous supply was prevalent. So once this is showing us change of polarity, you know that the auction will only head higher. It'll again test this 26050 and above it this rollover point of 26090. And that is what we did. We went on to scale above it. We made a range extension higher, but the range extension higher was not holding, not a good one in the sense the range was not extending by much because the volumes were not adding. The volumes you can see were reducing on 30 minutes. And this high which we got, I was speaking to you about how C and J we consider to be cousins, and both of them are known to give us false move. And you can see this highs came in the J where we got an RS, and this RS came right below the rollover point. So that is the reason we give the rollover point so much of importance all through the series. So this was very clear that unless we get some fresh demand at the rollover point, we cannot expect more upside. And that is the reason we got this dip back to VWAP in Nifty futures. Yes, the VWAP has held and the POC also has shifted to around the close 26065. But that is where we will need to look for tomorrow's open of how the volume shape up at this POC, and more importantly on the upside at 26090. On the downside, yes, today's VWAP would be important, but because we have not closed at the highs, we will have to have this as our support. The VWAP, E period VWAP, ETPO VWAP, which is around that big round number of 26,000. So that 26,000 along with this 25971 would be our support zone. And on the upside, we will have to take off this 26090 with volumes seen in the order flow and IB signals for more upside. So that is how we are placed in the Nifty futures. In spot, we have closed right above the BRN. 26013 is the close. And in futures, we are stalling just below the rollover point. So how is the inventory placed for tomorrow, and what is that we need to make note of for tomorrow's settlement? So let's now move on to the gamma exposure chart. I have the 2-window mode. On the left is the gamma exposure at the open, and on the right, the gamma exposure at the close. So you can see how at the open, which is what we saw at close on Friday, we had a 3-peak structure in the gamma exposure with 26,000 being long gamma and 25,900 and 25,800 being short gamma, with 25,900 having negligible difference between the long and short gamma. So we had a 3-peak structure and a very small minor peak at 26,100. So what we saw throughout the day, because of the higher open and Nifty spot staying above the 25,900, we were seeing a peak developing at 26,000. But what has happened into the close, just before the close, in fact, it was looking as if 26,000 would be the pin level. But as you can see, the 26,000 is still long gamma. It is not short gamma. So it is still not a uh, easy carry for the 26,000 straddle guys, because this is still not showing short gamma, and we are back to having a two peak, in fact a three peak gamma exposure. So if these peaks were not there and this was going higher, both of this, then you could have expected a pinned move. But now, because of what has happened at the close, 25,900 and 26,000 both have almost similar gamma. So at the open tomorrow, we could get a move away. So it is very important for us to be very alert at the open. And because we have to treat the settlement date differently, because here we know how the inventory is placed. So at the open, if we are getting a move away, we should be in a position to know which of this inventory is going to adjust. Accordingly, we will get good trades in that particular instrument. So in case we are going lower and we break the 25,900, then we know the 25,900 put guys could get a run for their money, and this 26,100 would be the upper reference. But if we sustain above the 26,000, then we can look at what the inventory is doing at the 26,000 call and put, and accordingly look to get some good trade setups in it. So this is one important chart you would want to have open tomorrow. So when the peak, I'll come to the other tool which we have and which we will have to combine along with the gamma exposure for tomorrow to be aware about what is happening. So we have the gamma density on the left and the gamma exposure, which was same as what we saw in the last chart on the right. So here you can see how clearly the gamma density and convexity are shaping up for a 26,000 close settlement for tomorrow. But along with this, we will need these two also to keep rising and this gamma exposure level to keep increasing. In fact, around just before the close, the gamma exposure at 26,000 was around 1 lakh. I'll just show that because we will be able to watch it. So you can see this at 315. You can see how the magnitude was higher. So it was looking as if it could get this peak, and you can see how these peaks were smaller and this was a bigger peak. But then what happened into the close, the inventory has changed and we've got almost similar gamma exposure 25,900 and 26,000. So we will need to see which of the levels get selected tomorrow or whether they even get selected. So that is the reason we will have to have both these charts open tomorrow and see how these shapes up in the morning. And at the open, if you are getting a move away, then we will have to see how this gamma exposure reacts and what is the signal we get in the volume X chart. So that is as far as the gamma exposure is concerned. With regard to the gamma density, what are the levels which we are looking for? You can see the 1 sigma to the downside at 25850. The upper 1 sigma is at 26,100. So that is what we will look out for if we are getting a move away at open. So on the upside, 26,100 would be our first reference, and these are levels which are based on spot. And if we are moving lower, 25850 would be our lower reference, and the tail, the upper extreme would be 26,300 for tomorrow's settlement, whereas the lower extreme would come to 25650. So this is in case we get a trend day structure developing tomorrow in either direction, then we will have a chance of tagging these targets, and at the same time we will see the inventory adjusting and accordingly change in the gamma exposure chart also. And same in the density as well as convexity. Right now it is pointed to 26,000, but what is not giving us the confirmation that it could be a close around here is that we don't have the short gamma signal in the gamma exposure chart. Plus we have similar gamma zones at 25,900 and 26,000. So we will have to see what is the open type tomorrow and accordingly look to trade off the open. So we will have to treat the settlement day differently, and we have to make sure we have these two charts, these two tools open all day along with the volume X, which will tell us when the supply and the demand mismatch is happening, and accordingly we get a good setup in the same. So that is it for today. As far as tomorrow's settlement is concerned, in case there are any queries, please feel free to post them. Before I can just have a quick look at the Bank Nifty futures, and then we will wind it up for the evening. So we have the boundaries marked out for tomorrow. So we have to make sure any move which is coming is in sync with those boundaries. So accordingly, we will have to make note of them. So as long as we don't get a short gamma over the long gamma at 26,000, we cannot say the straddle guys, the straddle short guys at 26,000 are safe. So as we are nearing the settlement, the gamma will be focused on very in close to the strikes settlement. So when if you are at 26,000, you will not find big gamma exposure at 26,200. So what right now we are seeing at 26,200 is long gamma, and it is the magnitude is very small. So these are like this is matching with this. Maybe there is a 26,200 call which is being written with the 25,800 put. So these could be combos which people have taken. Yeah, so when we have long gamma, we that is the reason we mentioned that we need to be alert at the open, and we could get a move. This is not a pinned move, so the settlement is not fixed at 26,000 tomorrow. So that is the reason we are expecting a move. So we will have to wait for the open and see what volumes are coming in and whether we are getting a move away or we remain in this range. So we already have discussed about the range 26,100 and 25,850 is the immediate upside and downside levels, and on the extremes also we have discussed. So we cannot decipher it today now what will happen tomorrow. We will have to look at the latest data, latest information in the open type, and then accordingly take action. For now the close definitely is not fixed at 26,000 because of this long gamma. So how this goes, how this develops, we can only uh, learn when we see this tomorrow and when the market opens. So that is it as far as the Nifty gamma density and exposure is concerned. Let's have a quick look at the Bank Nifty futures chart before we can wind up for the day. And you can see how Bank Nifty futures, we discussed about how we had formed a 3-day balance and we opened above this POC, and this was a open rejection reverse to the upside. Because we opened higher, we made an attempt to probe back, we got rejected at this previous day high, and you can see zeros on the sell side. And the volumes of the first 15 minutes were double the average volumes in Bank Nifty compared to Nifty. So that is the reason we went on to make new highs in Bank Nifty. But then again, after we made these new highs, we could not do much, and the attempt to extend higher in the hedge was kind of rejected. So nonetheless, but we have closed above the value and we have a nice P-shaped profile. So as long as we are above this value, we are looking for more upside. If we get back into this tail, we will have to see what the order flow shows us tomorrow with this POC of AP rate 58890 and these zeros which you see. These zeros have come at a very important point. This 58850 was the previous all-time high in Bank Nifty futures. So when you're seeing zeros in that zone, that is telling you that this is now support. So that is the reason, as long as this 58850 is holding, we can expect more upside in the current week in Bank Nifty futures also. So that is it for today from my side, guys. In case you have any queries, do post them here, or you can even mail us at support@wetrender.com. In case you have any specific queries to me, you can WhatsApp me. My WhatsApp number is will be put up here, and you can also DM me on X. My X ID is open. So this is my WhatsApp number. You can ping me directly on WhatsApp about queries what we discuss about in these sessions, and I'll be happy to answer them all. So let's have a great settlement tomorrow. We have understood what the range could be, what the references are, both in spot as well as futures. We will have them noted again in the report, which will be published end of day today or tomorrow early morning. And according to that, we will watch these two charts of the gamma density, convexity, and the gamma exposure. And in sync with the volume X, we will look to take some good trades for the settlement day tomorrow. Settlement day is different from the other days, and you will have to be alert, and you will have lot of opportunities to get some good and some more extra trades than you get on a normal day. So make sure you are at your best and you have the preparation also at the best. So signing off for today, and have a great evening, guys.